Welcome back to jimfx. Today we are diving into one of the most traded currency pair in the world, the Euro USD pair. I'm going to show you a simple but powerful scalping strategy that works in today's market conditions. So let's get into it. First, what is scalping and why Euro USD? So scalping is a trading style where you take many small trades throughout the day, aiming to make small profits, usually 10 to 20 pips per trade. Okay, so and the Euro USD is perfect for this because it has a very tight spread. That's one, and it's extremely liquid. That's two. Then three, it reacts beautifully to technical analysis indicators. Okay, so now we are going to first talk about a setup you need to trade this pair. So now we will be using the 5-minute time frame. So you always have to switch to a 5-minute time frame. Okay, so this gives us enough movement for multiple trades per session, but still keeps things unchangeable. You can use any time frame of your choice, but since we are scalping, we are going to use a 5-minute time frame. So here's what you need. First, you need a 50 period exponential moving average. This will help you to identify the overall trend. How do you set it on your chart? I told you we go always here. Then you tap on indicators right here. Then we always go to technicals. Then you can always either search the moving average or you can scroll down and look for it. This moving average exponential, you just tap on it. When you tap on it, it will be displayed on your chart. Then here you just tap on exponential and you try editing it to 50 period exponential moving average, because it's the one we are going to use. Okay, so here length, you always have to put 50 exponential moving average. Put 50. Okay, then other things you can leave them as they are. Need an RSI, that is a relative strength index. Also the same thing, you go where I have gone, then you go to indicators, then you look for RSI. You look for relative strength index, you tap on it, then also it will be displayed on your chart. So it period is 14 for the RSI, and it helps you to measure the momentum and overbought and oversold zones. Okay, so it is right there. So now we want to see, once you have added those, your chart should be clean and easy to read. There shouldn't be anything else. Then another thing is the strategy rule. How do you use this strategy? So identify the trend, that is first. When you know the trend, it will be easy for you to trade this strategy. So if the price is above a 50 exponential moving average, the market is in an uptrend. So for example here, you are seeing the market is above the 50 exponential moving average. You can see it there. It indicates to us that we are in a bearish market. Can you see that? I think you can be able to see how it is above the 50 exponential moving average. So we shall always look for buys when it is above. And the reverse is true. If it is below exponential moving average, it is a downtrend and we shall be looking for sellers. So always we shall wait for the pullback to our exponential moving average. So for example here, when you look here, the market has pulled back to your indicator here. When the market pulls back to your indicator, what do? We don't chase candles. We always wait for small retracements. Always the market has to come back to our indicator. Okay, when it comes to our indicator, we have always confirm with our RSI. So for buys, RSI should bounce from 40 to 50 exponential, from 40 to 50 RSI. Then for sales, the RSI should reject a 50 to 60 and point down. So the entry, how do we enter the market? We enter on the next candle that confirms the direction. Now, for example, here, when the market comes and it comes back to your RSI, you'll see that there is this candle. It is a bullish engulfing candlestick pattern. It has confirmed to us that we are still in the bullish trend. So now traders will come and enter right from there after it has confirmed to us the trend. So here you take your buy trade, you put your stop loss like 10 to 15 or 5 to 10 pips, then you target a 1 to 2 trade. Okay. Then for the stop loss, it is 5 pips. For the target, it is 10 pips. So you can see here, this was below our trend. It was below our RS. It was below our moving average. It means, so wait for the small retracement. When you wait for your retracement, it has come back to your moving average. When it has come back, it has confirmed to us with this candle. We talked about these golden candles. You can watch the video in the description. When it has confirmed to us that we are still bearish, so traders would just enter there. Okay. So now how do we add with our RSI? For example, now we have confirmed that yes, you are entering from there. Okay. You have confirmed yourself that you are entering from right there. Always the RSI, we said it has to be between 50 to 60. It has to reject the 50 to 60 and point down. Now, for example, here. This one, you can see how it rejected here, how it rejected the 60. It rejected a 50 level RSI. It rejected there, and you can see it is the sell that was made here after rejecting the 50 level. Okay. Then for this buy trend, there, you can see before buying here, you can see that this one rejected a 50 level of our RSI, confirming to us that we are still in the bullish trend. So the same thing will happen when the market comes back to your level. Okay. So now we are in the bullish trend. It came back here and retested our RSI. It retested our indicator, which is a moving average. When it retested right here, can you see this? So it came and retested here. It made a bullish engulfing candlestick pattern. Then you can also confirm with your RSI here. Your RSI showed that the rejection from our 50 level was made. Then traders would just come and enter immediately after that rejection. Okay. So stop loss, you put like 10 to 15 pips. Then you target a 1 to 2 trade. Okay. So that is it, traders. So for risk management and tips, scalping is fast-paced, so risk management is everything. Here's my golden rule. Risk only 1% per trade. It's easy to overtrade with scalping. To avoid trading during news spikes, because your account might be spiked out. And spreads they are widened and execution can slip during news. Number 3, stop trading after 3 losses in a row. Reset your mind. It is good for your psychology. So you have to record every trade. Journaling helps you to find what works best for your style. So that is it, traders. Thank you for watching. If this video has helped you, consider subscribing and give a like to it. Bye.